Can you hear me?
Yes.
Okay. Great. Good afternoon, everyone. Good afternoon to the panelists. Good morning, good evening to the rest of the audience who are watching from different parts of the world. And welcome to this thought versus derivatives panel. My name is Furaha Karba, and I head the Secretariat of the African Securities Exchange Association, and I will be your moderator for this session. So first of all, allow me to just congratulate the Arab Federation of Exchanges in a collaboration with the Saudi Stock Exchange for putting together an amazing conference. I have attended so many virtual events of late, and this is just exceptional. So well done to the team. And obviously, congratulations to the Saudi Stock Exchange for assuming the chairmanship of the federation. So our topic is quite topical for the time that we're living in currently. For the past 1.5 years, or should I say 1 year actually, with the out of the pandemic, the financial markets have seen high levels of volatility, and the commodities sector specifically has seen such uptake, such rise in its uptake, and quite a high peak in the performance of that product. And so I'm looking forward to the discussions in this panel, the engagement from the panelists, engagement from the audience, and the audience, just to remind you that we welcome you to submit your questions through the chat. And at the end of this session, we are going to take a Q&A just to address some of the queries that you might have. Now, without further ado, I would like to invite my very distinguished panelists to introduce themselves. And while at it, kindly just give us a brief of what the past 1 year has been market institution. To start us, or purposes of this, let's start with the lead Hanafi, and then to Mr. Karim Meki, followed by Mr. Les Mail and Mr. Mazen Al Sudairi. Sorry. Over to you, gentlemen. Thank you.
First of all, thank you for the introduction and for choosing an interesting topic that related to the commodity exchanges and derivatives and all these things, as we in the Arab world are really in deep need for creating and having this type of facilities in our markets. Definitely the last year, the year of the COVID-19, was not the best year ever in the last century, I believe. We faced everywhere in the world, not only in the Arab countries, we faced problems. But specifically when it comes to the commodities and in the Arab countries, we are net importers of most of the food, and the commodities that we import come sometimes from very far away. So there were some types of disturbances regarding the supply. So the global supply chain over the last year was not very reliable in some commodities, and accordingly, this had great effects on the prices, the fluctuations of prices, the fluctuation of being able to supply and finally feed people in some places in the Arab world, which is a great problem. Accordingly, we believe that the scene is ready to introduce different mechanisms for dealing with the commodity supply chain in general, and specifically when we talk about the food supply chain. Most of the commodities that we're talking about are commodities like wheat, like rice, like sugar, like some of the commodities that the Arab countries are in a deep need and net importers, and in some cases the highest importers in the world in these commodities. While all the Arab worlds, they have ports, but we don't believe that we have any delivery port in any of these countries, the 22 countries, while every country has a port on an ocean or a sea. But the majority, I believe, 90-something%, with very tiny, small exceptions, we don't have delivery ports. We don't have a mechanism for pricing. We are just price takers, and we feed our people. So we need to learn from the last year that there is a need for change.
Thank you, Khalid. Karim, kindly.
Yes, good morning, and thank you very much for organizing this session. It's my pleasure to be with you. My name is Karim Mikki. I am the Managing Director for the Egyptian Mercantile Exchange, which was launched several months ago. We're new in the market. Of course, as Dr. Khalid already mentioned, that this year was very difficult in Egypt, not only in Egypt, actually, in the whole world, but especially in Egypt. We've been struggling with all the implications that happened because of COVID-19. There is no really direct impact concerning the activity of the exchange, because we are still in the phase where we didn't start yet the action on ground. We're supposed to start on mid-April. We will start with introducing ourselves to the Egyptian market as a part of the players in the market, where we will try to manage the automation of the wheat cycle. Of course, it's a big project for us. We took into consideration that the negative impact of COVID-19 will affect the actual system that is already in place, but it is all manual cycle. And our role here is to try to automate as much as possible the cycle that is already on the ground. To give you an example about what is going on, we're introducing for the first time, for example, the use of the POS machines where the wheat is already delivered, to try to register all the coming agricultural deliveries. Of course, we're trying also to introduce something like payment, contactless payment, as an impact of the COVID-19. It's relatively new for us, especially with the culture. The farmers are not used to do this, so it's a big challenge for us. I hope we will be able to do it and succeed. So this is mainly one of the shadows of the negative shadows of the COVID-19 spread in the country. So we hope we can do it. This is mainly, it is a difficult challenge, of course, for all of us in Egypt, but I hope that we will manage to do it. And I suppose it's not only us. Everywhere we struggle with the COVID-19 problem. And hopefully with the all the researches that are going on around the world, we will finally find a way to get out of it soon enough. So keep safe. Thank you.
Thank you, and good afternoon from myself. My name is Les Mail. I'm the CEO of the DGCX Group, the DGCX Exchange, and our wholly owned subsidiary, the ECCC, the Clearinghouse. We are the largest derivatives exchange in the Middle East. Typically our products, whether it be hydrocarbon, forex, metals, equities, all of our contracts are financially settled. There are some exceptions for our Sharia compliant, physically mandated contracts in the metal space, but our contracts and products are almost exclusively financially settled, which means we need a spot index to reference off. We trade and clear about $2 billion a day of notional value, and we operate on a 17-hour trading day from 7 in the morning till midnight. And to come to the point from our moderator about COVID, if you'd ask any exchange leader in Q1 last year how long they could run their exchange remotely, they may have said 1 or 2 days, as certainly I would have done, and yet we ran the business from laptops in people's bedrooms for about 2.5 months, much like many other businesses did. And I think the exchange infrastructure, the ecosystem globally was able to do its best to stay open and support the market. Notwithstanding from what my friend Mr. Khalid was saying earlier on about the actual physical flow of the commodities, but when you think what a derivatives exchange is there to do, which is to undertake risk management at its kind of core level, give speculators, investors, hedgers, asset owners the ability to take a forward price look on the underlying price of their asset and to risk appropriately for whatever view they may have on the global macroeconomics going forward. To have that tool that was open, I think was a very useful experience. And here in Dubai, in the UAE, the lockdown was, I'm sure, as severe as other countries in the Middle East, but we do seem to be emerging with the success of the vaccination program out of the other side ahead of Dubai Expo 2020 later on this year. So very, very simple overview. And the last thing I'll say before I hand over to my colleague, Mr. Nazim, my early start in this career, I might have ended up running a derivatives exchange, but my early start was designing a spot exchange, a spot gas market in Europe. So I appreciate the tensions and the difficulties between the spot and the curve. Thank you.
Yeah. Hello. Hello. Yeah. Thank you for this. Actually, this opportunity, Arab Federation. Actually, the year 2020 for us was on Rajhi Capital. It was a year of efficiency that we learned how to move fast. Well, in the first 6 months of the year during the pandemic, or let's say in March and April, how to actually adapt new policies and measurement to manage working remotely and maintain serving our client. And the second half was there is a big change in Saudi stock market. And Saudi stock market first 6 months, average trading per day was about 3.2 billion riyal. About 44% were retailer, below than 1 million riyal. The second half had actually almost tripled to above 12 billion riyal, and more than 66% were retailer. If we add with them the below 1 million, above average 1 million, they will reach about 87%. So it was efficiency in the first half, how to adapt to new policies and a new environment we've never been to. And the second half, how to serve this amount of inflow. It was actually it was actually challenging our environment, our mentality. Saudis, how they revised the allocation of assets, and because of new regulations, For example, regarding the reform happening in Saudi Arabia, had given higher weight for organized market, where unorganized market had to slow down. So many smaller investor and unorganized market had shift either them investment to equity market. We face actually this changement and this challenge, and we're proud that we will manage it. And thank you for this the introduction. Thanks.
Thank you, gentlemen. So moving on to the question segment, my first question will go to Dr. Khalid. Being at the head of the Arab Union chambers, I take it you have a perfect view of the market and its operations. And obviously, I use the word perfect with utmost elasticity. And so, please tell us, quickly, before the mess brought by the pandemic, which was the most popular in your area in the Arab world? Was it the spot or this market? And how has it since changed with the pandemic? Do you see some areas of convergence or confluence or perhaps dislocation between these two markets? Thank you. Sir, you are on mute. Kindly unmute your microphone.
Kindly repeat the last part because I was not able to hear what you were saying in the last part of the question.
So has the pandemic brought some areas of confluence or dislocation between the two markets? How do they relate to each other in the Arab world? Thank you.
Yes, definitely. The pandemic, as I mentioned earlier, affected the market dramatically, the Arab markets in some regions, specifically when I talk about places because the Arab world is not homogeneous, because the 22 countries are not homogeneous. There are some countries faced more problems than others, and there are some areas, some countries face more problems than others. And there are some countries in the Arab world that are very dense in population, and others are the opposite. So the effect was very clear in the areas where the density of population is very high, when the financial resources were not enough. And accordingly, the deals used to be day to day. So there was not a sort of a perfect market, as you mentioned here. The perfection was not in in these markets. The opposite was the case, and the markets used to face fluctuations in prices, fluctuations in supply, fluctuation even in storage. In some cases, in some areas, the markets faced excess supply or excess storage. In some other areas, shortages. And in the absence of mechanisms of exchange and ability to smooth the supply, the problem was very complicated. That's why we started to talk with different entities around the globe about having some commodity exchanges, using some derivatives, not just relying on the traditional and the classical way of supplying the food with the system that already exists. We need a drastic change in the system, and the drastic change here means that we need to talk about origins, logistics, shipments, storage, and the mechanism of a commodity exchange with all the stuff needed here, and to have all this system digitalized.
Thank you for that very succinct feedback, Dr. Khalid. Just for clarification, the perfection that I mentioned was of your over to the entire region, not the markets themselves. So thank you very much for the feedback. So I'm just going to move right ahead to Mr. Mickey, who, as he's mentioned, is a new entrant in this industry through the Egyptian Mercantile Exchange. So at the time you were ready to launch your market, we were hit by this pandemic. You had more or less everything to kick off. So I imagine to go ahead and make some changes, structural changes to the framework that you put in place. As you've just mentioned, you're talking about automation and contactless payment during your introduction. Please tell us, what are the risk-mitigating factors? What are some of the gaps that identify the pandemic and that now you're going to embed in your risk going forward? Thank you.
I'm sorry, I didn't hear the question. The quality of the voice was very bad. Can you repeat the question?
Can you hear me now?
Yeah, that's better.
This is great. So my question was, with the pandemic early last year, and it was probably ready to be. What the changes had to your framework? What are some of the gaps that you identified? Production and automation that you have underway, contactless payments. So I just need to understand how has that dynamic changed the risk framework that you had set up for the Egyptian Mercantile Exchange?
Okay, as much as I understood from the quality of the voice is not that clear, but as much as I understood your question, we've been planning to launch activity nearly about 1 year ago. And we've been taking into consideration from the moment that we were supposed to draw the flows of the workflows and how we would be entering the market with the idea that we need to digitize everything, to automate everything, to take into consideration that the pandemic will have the major impact on the market, and hence we took into consideration to try to understand how the cycle is already running on the ground. From this point, we started to analyze what are the parts of the workflows that could be automated, and what is the best practice in this part that is already applied in other exchanges or other countries. Then the step that came after that is to communicate with different entities and try to brainstorm and see how we can manage to integrate all the effort together with all the entities and their expertise and try to launch the activity. So what we're doing of the
Apologies for what just happened. I think Karim is having challenges with the connectivity. I hope you can hear me clearly now. I see the thumbs up. I think it looks like I'm also having some challenges with connectivity. I'm not sure whether we should blame it on the evergreen sheet that has been stuck on the Suez Canal for probably blocking the wavelength. We will move on. Take me to the next speaker, Les. Now, you mentioned that the DGCX performed last year. I think Les was trying to be very clear because I read that had a year-on-year growth of 50%. One of 20, and the rest of the world was battling around to just remain operational. Congratulations to you, Les. Can you hear me? No? My.
If you can just repeat the question with as few words as possible. It's every third word is cutting out.
I see. All right. So my question to you, since at the helm of DGX, you rightly put it, you're contactless as one of the leading derivatives markets in the region. How prepared were you for before the pandemic struck? Did you have to re-automate some certain aspects, especially to ensure finality?
Okay, I'm going to answer the question that I think was asked. Apologies, but as I say, every third word is cutting out. I think our moderator is going to log off and log back on again. So please accept our apologies as we work our way through this. I think the question was about what automations we put in place. Was there anything over and above what we had to do? On a rather humorous note, perhaps, the lockdown, which was reasonably severe here in the UAE, affected us on Fridays. We're a global exchange with global members from 15 different countries at the last count, and therefore we run our markets Monday to Friday. That is unusual in the working week in this region, which is Sunday to Thursday. So one or two of my IT guys at 5 o'clock in the morning on a Friday trying to get to work were stopped by the efficient Dubai police and asked what they were doing outside their homes during the lockdown pandemic. So other than that, I have to say the federal authorities and indeed that the infrastructure works very well. We are migrating to NASDAQ, which was announced in the summer last year. It's a very big project for us. We go live summer next year to replace our trading, clearing, risk management, surveillance systems, etc., to move away from Sonova. But I think the question was, did we have to do anything over and above? No, we really didn't. As I say, running 17 hours a day is pretty much close to 24 anyway. And the kind of downtime that we have at the weekends to do the systems work remain the same. I think our issues during lockdown, if you remember this far back, were the negative oil price in April in the US WTI contract. Whether that was a COVID pandemic issue, discuss. I think it was more the supply-demand fundamentals of the Cushing constraint there in terms of the physically settled contract. But other than that, the exchange and the participants were able to work as normally. I'll just go back onto mute, ready for the next question. Hopefully that helps the signal.
Thank you, Les. I think serious issues here. I hope. No?
I can hear you now, yes.
I'll try to be as loud as possible. I'm actually leaning up. So yeah, I'll say thank you, Les. I can barely hear most of you. It's the connectivity is really bad. Your voices are coming in patches, but we will overcome this. Right, back to you, Karim Meki. You were telling us about your risk framework, especially after the COVID pandemic. Kindly, please.
Yes, can you hear me now? Okay. So I'm sorry for the disconnection. The connectivity issue is a big problem. It seems that the network has a COVID problem. Okay, so as I said, we were trying to implement on the ground our workflows and try to integrate all the expertise that we've been able to gather into one ecosystem that try to mitigate all the risk from the COVID-19 issue. Now, what we have in mind is that we will try to survey each and every point across the country where the farmers are delivering the wheat with dedicated teams to support the handling, make sure that the distancing and all the measures that should be taken, manual cycle that is already in place as much as possible, and make sure that the contact issue or trying to be in person or trying to be in a place where there is a crowd unnecessarily is replaced by a service where the farmer, for example, can get his money before leaving the place where he delivers the wheat, or goes to an ATM machine instead of going to a branch in the bank in the village where he delivers the wheat, to avoid the crowdness and all this kind of stuff. This is mainly what we have in mind and what we've been trying to discuss with all related parties that are already working in the field. But of course, the implementation itself, when it happens on the ground and we see the feedback and how things work on the ground, this will change. The feedback that we will get will adjust our perception of the situation itself. I believe we will be able to manage all the aspects as it should be done. And we will see how good we are doing in this phase, which is the first actual integration in the market. I hope we will succeed in that. Thank you. I suppose should be getting back to Furaha, but she was disconnected, as I see.
I think our moderator has just dropped off and back on again. If people could just give her sort of 5-10 seconds or so. If she's struggling to log back in, I think Mazan, the next question was directed towards you, but let's just give her 5 more seconds and hopefully we can solve the audio qualities.
Sure. We learned the efficiency this year, so.
It's been a long year already. It feels with virtual meetings. To be in Saudi now in person to do this.
Absolutely.
Okay, my friend. I think we can hear you loud and clear. So why don't you take through while our moderator is still dialing back in?
So shall I start?
Yes, please.
Well, actually, market was actually the question I'm trying to debate and discuss it with you was about the commodity trading in 21 and beyond 21. And market now, investors are talking about super cycle, or there is a super cycle. If we look to actually in 2020, if we took actually Bloomberg Commodity Index, we'll see that the metal index had recovered since July, August, sorry. where the energy was actually index were lagging behind it till November that it rallied, followed. The reason is we think that during November was the vaccine. When Pfizer and Moderna had announced them successful experiment, we saw four things had happened in the market. The market had shifting more to commodities, and commodities rallied. High yield bonds has actually had rallied, and either emerging market had rallied, and stock market either in state had rotate to more value sectors. Now, if we debate what had happened in commodity itself, it was clear that there is a new segment has been created. If we went to metal, as for example, the EV vehicle booming, that expected to reach about 10%, or let's say double-digit market share in the coming between 10 to 15 years, according to expectation. And this actually, this segment is copper intensive relative to the conventional vehicles. On the other side, we're seeing actually the solar panels as actually expanding, and this is putting more pressure in commodities. If we go back to agriculture, we're seeing either two other segments are booming. Planet-based protein, where actually till now it's just only 1% of the protein market, or the size of this market is about $8 trillion. So we're seeing high potential for this market. On the other side, we're seeing either the biodiesel and the bioethanol that's consuming intensive soybean oil and sugar. There is expectation right now from ADC company. I'm expecting that the growth might actually rally by 50%, almost £500,000 in the coming 2-3 years. So is usually super cycle happened when there is actually a boom in major economies, as has happened in China. There was rapid urbanization that happened in 2003 and 2011 till 2011. We're not seeing that right now, but what we are seeing that a new segment and a new segment and a new commodities are reaching and getting higher weight in the market. That it was happening right now, and market excited to follow. On the other side, investment and supply had faced a slowdown in the last 3 years because of C2 emission acquisition and actually regulation been restricting investing in commodities, and how major commodity companies were high leverage. So those had combined together, and indicators that we're going to absorb uptrend in commodity market in the coming 3-4 years. Thank you for allowing me this opportunity.
Thank you very much, Mazen. Thank you for that. I hope I'm clear now. Can you hear me now? It's better.
Yes, thanks.
All right, thank you. The Q&A session. I think our audience have been struggling to listen to us. And so we have not seen any questions. We have not received any questions so far, apart from a comment saying that the sound is not the best. So with that, because at this juncture, we're supposed to take the Q&A. What I would like to do is probably give each and every panelist an opportunity to probably give their participation to say 1 to 2 things relating to this market and probably outlook of their institution going forward. Thank you. So sorry, let's follow the same sequence, starting with you, Dr. Khalid, and then going to Karim, Meki, Les, and then if Mazen, you'd have it. Yes, please.
Okay. If I understand, I have to comment now. Final comments. I think that what needed now in our Arab countries, even from the private sector perspective and even from the governmental perspective, is to do a sort of aggregation among the small producers in different areas in the region, and to be communicated with the origin markets of the commodities that the Arab world is dealing with. What needed here is to have to deal with the sources in other countries outside the Arab world to aggregate the production through a mechanism which is purely digitalized, and using the derivatives over here, and even we can talk about futures, we can talk about options, and or even some forward markets in some cases. And then we need to have hub ports to exist in both sides. And behind these hub ports, there is a great need for a mechanism for commodity exchanges. As I mentioned earlier, these commodity exchanges will guarantee for the small producers the financial resources on the proper time. So there will be greater opportunities for leverages over there, and also will make the countries that consume or demand these products to be to a great extent certain about the supply of what needed from the other side. So what I want to highlight here is we need in our region more than one commodity exchange in different places, with logistics hubs to be created in some selected ports, and these ports to be linked with other ports in Latin America, other ports in some places in Europe, in the United States, in Asia, and to have a global, I mean global here is linkages. I mean the linkages here to be global with suppliers and demanders with very well-prepared digitalized system to carry on all the processes, starting from the decision to produce till when consumer consumes in the supermarket. Thank you.
Karim Meki, 3 minutes to go.
Okay. I totally agree with Dr. Khaled. I believe it's crucial now that we think about having a number of commodity exchanges that start with a spot trading mechanism, and think about the derivative markets in the future to make sure that the value chain is in place and is practical and is already coming over all the negative impact of COVID-19, the pandemic, and the cuts that happens in the value chain, trying to put together the demand side and the supply side to make sure that there is a flow of commodities that goes from one country to another. Of course, this will not happen unless the infrastructure is based on the need of the real market and the actual choice of the commodities that are mainly strategic and very important for the country. So I believe this is very crucial now. Every country should think about this and be sure that the way they implement the exchange is a modern way based on technology, and is the solution that already take over the actual problem that are on the ground. Thank you.
Thank you, my friend. I'll just quickly add, because I know we're running out of time, that I don't disagree with what my fellow panelists have said. Any derivative contract, any exchange can only be successful in the commodity space if there is the underlying trade flow of the core commodity. That means we have to start at the spot level. It has to be on the physical delivery level. We then get a reference price, a benchmark that the derivatives can be hooked under. But the physical delivery and the multiple delivery points that Dr. Khalid was saying, they will have their own challenges in terms of warehousing, in terms of storage, and quality standards. So this is not going to happen overnight. People forget perhaps that Brent crude, one of the leading contracts in the world, has struggled to start, had about 3 different launches, and is indeed a physically settled contract, much like WTI in the US. So it's quite right that we start with the core commodity on spot delivery. Thank you.
Well, thank you for this opportunity. I would like to say that we're going to experience K-shape recovery. And the industries that will actually upward, it's one of them, it will be the industrial technology and manufacturing and software and the logistic. And this is online with Mr. Makki and Mr. Leils talking about building more inventories and building more reserves for commodities. So this is one of the industry that will recover in the future, is the logistic of commodities with this K-shape recovery. Thanks.
Very much, gentlemen. And so we are right on. One connectivity sound experience. We tried our best to get the message across. And thank you to the team at the Federation, and as well as the Saudi Stock Exchange for putting this amazing event together. Thank you all. Have a great afternoon. Bye.
Thank you.
Thank you.